Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena, and with me is Priyanka Uppal, and this is the show where we will tell you how the markets fared in today's trading session and the setup for tomorrow's trading session. But first up, let's take stock of how the markets closed today. A solid day of recovery coming in, Priyanka. A sigh of relief from yesterday's sell-off. In fact, today we managed to scale 24,200 levels on the Nifty. In fact, Sensex also we managed to, from the lows we managed to recover 650 odd points. Nifty Bank posted a stellar recovery of more than 1,200 points coming on Bank Nifty as well. Metal Pack, of course, was in focus today, shining on the back of that news coming in on the anti-dumping duty, and of course the financials were also in focus today. They were the top sectoral gainers, but largely these were the sectors that did pretty well for themselves, and a day of a massive recovery. In fact, mid-cap and small caps also recovered, at least from yesterday's blowout that we saw coming in. But a couple of names that were in focus today on the back of the results. Priyanka, you want to take us through all those names?
Absolutely. In fact, Ankita, what could have gone wrong from here? If you see, the India VIX, that has already hit a 4-month low. FIs are already sold 1.2 lakh crore in the month of October. A shaky month, whole choppy month we saw, choppy start to November, but then November has a seasonality trend, and now looks like the little, the way you said, the sigh of relief just ahead of the presidential elections. Maybe, market has priced in who's coming, or maybe that we were already in oversold zone, that there was so much of value which was emerging in markets, and that's what we saw, a sharp recovery coming after 1 p.m. Nifty in the top sectorals, rightly pointed, financial, auto, metal, and of course metal on the exclusive story that we'll bring in a bit from Prakash Priyadarshi, that he talks about that there could be an anti-dumping duty on steel that could rise to 12% from existing 7.5%. That took the sentiment, and of course there is one more news doing the rounds about is also another round of stimulus coming in from China. But the stocks reacted on this particular news today. But the kind of move we saw in Gland Pharma, 13% surged stock post the numbers. ABB though slid more than 6%, though it recovered later to close by 2.5%. In fact, the comments from which came in from the con call, that also did not lifted the sentiment. It was just that the overall recovery which came in market that lifted the stock towards north side. In fact, Amara Raja, that was also inline sort of numbers, but then stock was down by 3.5%, 4%. There was no sign of recovery because Nuvama has slashed the target price. So these are a couple of the stocks which were actually the highlights for the day in terms of earning. But of course, the big highlight is the recovery
on the market, Priyanka.
Now, Shilpa Rout is with us, who tracks derivative very closely, and she's here with us to tell us now what to expect from the index. Are we in for a sharp rebound tomorrow also? How should one trade? Shilpa, welcome to show. Please tell us what should be the right strategy for index traders right now? What are the levels that you're eyeing at this moment?
Good afternoon, and thank you for having me on the show. Talking about indices and the setup, yes, the solid recovery that we saw today, it was way beyond anybody's expectations. We were hoping for a good recovery, but probably 24,200 to 250 is somewhere that we are actually expecting some sort of resistance. However, the close definitely suggests something different. It might be a good gap up also tomorrow. If that happens, then we might see a trend reversal towards 24,800 to 25,000. But if we fail to sustain anywhere this 24,200 tomorrow, then probably we'll just be getting these sort of in between very strong rally, which will only be a shorting opportunities going ahead. The FI's net longs are still at 23%. So today's data will be very crucial to see if there's any sort of short covering happening, or whether they've added longs or they've added more shorts. So that is very important to scrutinize today. But the setup, I believe, for tomorrow should be a good opening tomorrow, and then it will be crucial to see whether Nifty and Bank Nifty both sustaining this rise that we saw today.
Expecting, but of course, as volatile as the markets are, it's a wait and watch on how the markets really fare. But Shilpa, in this market, in this volatile market, is there any pocket that you're seeing value in, or a buy call on any of the stocks that you're seeing?
Yes, definitely. I have two buys for tomorrow. I would be very keen on these two stocks. First one would be Glenmark. It is a safe space. It's far more defensive, and Glenmark, has been sustaining above the 1700 zones very strongly right now. And the more it does, the more possibility that the high levels of 1800 to 1850, 1900 can come in as well. So that will be the stop loss. Glenmark 1700 is a stop loss, and look for targets till 1820 to 1850. The other one would be a buy in Polycap. In the last hour trade, of course, there are many scripts that has shown very strong strength. But Polycap in particular, just trading above 6,500 is very positive for the stock. So I believe, on any declines towards 6,450 also should be buying opportunity. Polycap, I believe, should do 7,000 very soon.
So Polycap and Glenmark Pharma, these are the two stocks that Shilpa is bullish on right now. Though the setup looks very strong, but she wants to see, at least wait and watch on the index level, how we open up tomorrow. Thanks very much, Shilpa, for joining in and sharing your insights on the market. Moving on, of course, the market masters that we try to bring in the word from the wise. What is their strategy? Which are the pockets that they find value in? When we spoke to Samir Arora, founder of Helios Capital, he spoke about the filters that he used while buying into the recent correction. Listen in to find out.
For the near future, we are not buying any company that is disappointed this quarter, because it is my belief that when you disappoint, at least generally if you disappoint for the first time, the first quarter that is, and before that you were not disappointing and you were doing well in life, mostly this chain of bad results continues for a number of quarters, which is what I call momentum of fundamentals.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back.
Welcome back. You're watching Your Trades on ET now, and it looks like market was waiting for this flip movement, which just appeared to have come today, because the trend has actually flipped. Now Nifty shows you a trend of long built up, the kind of recovery which we saw today post 1 p.m. and there was a clear short covering rally what we saw on Bank Nifty. Tomorrow being the Bank Nifty expiry, so should we expect more move? There's more legs to that rally. We'll have to really wait and watch. But the trend, what appeared today, VIX has come into 16.1. There's already it had already fell down to 4 months low level, but now a lot of action which you see at the strikes like 24,200, 24,300. These were the strikes where the maximum of the calls of these strikes were bought into. And of course, looks like market is finding support. It's finding its feet near 24,000, 24,100 levels, wherein the maximum of the put writing has happened. Earlier, Ankita, from last many days, we've seen that there was no support which was appearing. Like there was put buying, but put writing was not happening. Yeah. So a big sigh of relief, the way you started the show.
Absolutely. But with that, let's go across to an exclusive news break then on ET Now that we have learned from the government sources that they may announce a safeguard duties on steel imports. Now, the anti-dumping duty on steel is expected to rise from the current 7.5% to 12%. On the back of that, we did see those names, the JSW Steel, Tata Steel and the Steel Pack shining away in trade. But let's go across to my colleague Prakash Priyadarshi, who's joining in with this exclusive news.
Yes, we are learning from our sources that the government is likely to announce safeguard duties on steel imports very soon. We are given to understand that the Finance Ministry is likely to make final decision to protect domestic industry from cheap imports. In fact, the anti-dumping duties or safeguard duties may be increased to 12% from existing 7.5%, and the government is also contemplating tightening quality checks on imported steel, a very significant development coming in. Sources have also informed that the Steel Ministry has made a fresh appeal to the Finance Ministry to take a final call as soon as possible in order to protect the interest of domestic industry. The Steel Ministry has also informed the Ministry of Finance that the steel exports have decreased by 36% in the first 6 months of the current financial year, whereas imports have risen significantly by over 41% in the first 6 months of the current financial year. Therefore, India has become net importer, which is an alarming situation for the domestic industry. Therefore, industry has been demanding government for its urgent intervention and calling for anti-dumping duties and safeguard duties against cheap imports from China and countries like Vietnam. Along with that, the industry has also requested government to impose duty in line with those of USA, European Union and Canada, where these countries have imposed 25% safeguard duties on steel imports to protect their domestic industry. Interestingly, imports have increased sharply despite the fact that there is a surge in the inventory of domestically produced steel. Therefore, the government is likely to make a final decision as soon as possible.
This entire news is what took the metal pack over the moon today, and not just metal, in fact, and not just steel, in fact, the whole metal pack only. But there were a couple of buzzing stocks on the back of earnings as well as some upgrades from the brokerage house. Gaurav is standing by the list of those stocks. Gaurav, over to you.
Well, yes, RVNL is going to be in focus, and the reason being that the company has emerged as a lowest bidder for two projects. The first one is South Central Railways project worth 635 crore rupees, and second is the Eastern Railway project worth 837 crore rupees. And as a result, we saw some uptick in this counter as well. Apart from that, Ola Electric is going to be in focus, and the reason being that the stock is down more than 7%. And when we talk about the stock performance, it is down almost more than 50% from its all-time high level. And the reason being that today the 90-day lock-in period for anchor investors have ended, and as a result we saw some sharp pressure in this counter. Next, let's talk about Amara Raja. We saw inline set of numbers from the company, but at the same time Nuvama maintained its buy rating but cut the target price to 1580 rupees versus what it was at 1980 rupees. And the reason being that they say that lower multiples were assigned to the company because of the rising competition in the lithium ion battery segment. As a result, we saw some pressure in this counter. ABB India, when we talk about numbers, we saw a weak set of performance, while EBITDA margin was actually higher than estimates, but when we talk about revenue and profitability, that was lower than the estimated levels. And at the same time, UBS has maintained neutral rating and a target price of 9,100 rupees, because what they say is that the EBITDA beat that we have seen was actually factored in the price, and that is the reason why we saw some pressure in this counter as well. Lastly, let's also watch out for Mazgaon Dock. This company came up with the numbers. We saw a strong set of numbers. Revenue increased almost by 50%, while net profit increased almost by 75%. We also saw a sharp uptick in EBITDA margins of around 800 basis points on a year-on-year basis. As a result, we saw some uptick in share price as well. So definitely watching out on all these counters on the back of the numbers as well as the news flow that has come throughout the day.
Well, those were some of the stocks that were in focus on the back of the results. But let's go across and listen into what the management of ABB India had to say about the conversion rate and the large orders in a backlog. Will they really see execution or not? Well, let's go across and listen in.
Given that our books have been mixed with now the large orders, which have larger gestation period, so the conversion rate that we may have witnessed in past, that may not be the same velocity.
Overall, I think these large orders which are there in the backlog will see an execution which has to match with the overall project timeline. So that's something which we are trying to make sure that we're timing it correctly so that we don't have a lockup and net working capital in terms of receivables out there, and also we're making sure that what is needed for the project is what is delivered so that we have a seamless execution of this particular project.
Okay, so strength in domestic market, but the conversion rate won't continue at the same velocity. That's what actually feared the traders, that stock did not recover that very moment. It's just the recovery which came in the whole market lifted the stock also to close with just 3% of cut. We did speak to Rakesh Sharma also, ED for Bajaj Auto, and let's listen in what he spoke about the growth roadmap going forward and what he believes about the company's sales picking up from January or not.
It was a very muted exit from quarter two. Quarter one for the industry was good. Quarter two was a bit muted. And then there was a slower start. But we had also said that more and more one is finding that the last few days, particularly around Diwali and Diwali regions, can swing it. And that is exactly what has happened. So I would say we are still on course for what we had said at the beginning of the financial year, that we see the industry growing at about 6 to 8% in the fiscal. That growth being driven by the top half of the industry, which is the 125cc plus segment, which should be in double digits. And therefore, obviously, the 100cc segment are tad lower. And our primary focus being in the top half, we should outpace that industry.
All right, then let's shift focus to an ET Now exclusive. Then Aditya Birla Group's flagship Grasim Industries is emerging as the leading suitor to acquire a controlling equity holding in AkzoNobel India from the paint maker's Dutch parent that owns about 75% stake in the company. My colleague Anurag Joshi is joining in with the details.
Grasim Industries, the flagship firm of conglomerate Aditya Birla Group, is emerging as the leading suitor to purchase a controlling equity stake in AkzoNobel India. The other key contender in the transaction is Asian Paints, which is competing with Grasim to buy the said stake. Now, sources have told ET Now that both the companies are in touch with the top leadership of the Dutch parent AkzoNobel to purchase the stake. Citigroup is the advisor to AkzoNobel over the sale process. AkzoNobel markets the Dulux brand of paint in India, and their entities control about 75% equity stake in AkzoNobel India. A successful buyout would mean that the buyer will be paying at least 15,000 crore rupees, that's $1.8 billion, for purchasing the stake. And plus the buyer will also have to make an open offer according to the SEBI rules to the remaining shareholders of AkzoNobel India to buy the remaining shares in the company. AkzoNobel had said last month that it is going to do a strategic review of its global portfolio, and the initial focus was on the decorative paints business in South Asia, specifically meaning India. And AkzoNobel said that it is open to various options that included divestments, M&A, partnerships and ventures. Grasim, in fact, this year had forayed into the decorative paints business with the Birla Opus brand.
All right, so the competition intensity amongst the paint players, of course, intensifies. Thanks very much, Anurag, for all that details. But moving on, in a heated final push, Donald Trump and Kamala Harris are rallying in swing state Pennsylvania, each vying for momentum in a race that's split nationally also. Trump confidentially claims a landslide return to the White House, while Harris promises a presidency for all Americans. Meanwhile, Elon Musk, who faces criticism over election misinformation on his platform X, as his post backing Trump have garnered billions of views, raising concerns about potential influence on the vote. But we caught up with some experts on what they make of the elections and its impact on India. Listen in.
The impact on India, if Kamala Harris wins, there'll be a fairly safe and boring outcome. More of the same is what you are going to see. If Trump wins and the Republicans win both houses, then you can see some really radical changes. There'll be a lot of wind in Mr. Trump's sails. If you get very high tariffs from him, then typically there will be retaliation from China, retaliation from Europe, retaliation from India. We retaliated in Trump's first time to his things. And the problem is that if we retaliate, then Mr. Trump may retaliate further. I mean, there is a real danger of a all-out trade war. I think if Trump wins and the Republicans win both houses of Congress, then the markets will get rather nervous as to what is going to be the outcome.
Two specific points that would drive markets would be potential tariff risks on a Republican sweep, potential increased fiscal issuances on a Republican sweep, and higher risk premia on both FX and rates. And there will have to be some probability that you assign to maybe a 60% import tariffs from China and 10% to the rest of the world. Whether it happens or not is immaterial to what market action would be. We think that in that scenario, the dollar could be up by probably another 4 to 5% from current levels, and treasury yields could also be up quite substantially from here. India being a bit of a risk-off currency within the emerging market framework could be an outperformer.
And whether we get a Republican clean sweep or not, presuming the congressional houses are split, then the presidency will have perhaps a bit less influence than it might if we had a Republican clean sweep. But certainly, as much as we understand about the policies of the two candidates, the two starkest kind of macroeconomic differences are between the likely budget deficits and on the tariff side. It seems likely that a Trump presidency would be more expansionary on the budget side, and a Trump presidency would be much more activist on the tariff side.
Huge deficit when we are talking of spending. And right now, there's a range of economists who said both Kamala's plan and Trump's plan are likely to increase the deficit, but Trump's plan by an order of magnitude more than Kamala's plan. And this is about 30 to 40 economists who've come out and basically given this opinion.
All right, with that, it's a wrap on this edition of Your Trades. We'll take your leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.